Hey guys, welcome back to the channel. So at the behest of the YouTube algorithm, I'm going to make a very milquetoast video about the best and only trading strategy that you need to make money in Bitcoin / cryptocurrency in year 2024 or year whatever you're watching this, right? The strategy doesn't change. And I'm also going to be making this video as a warning to against get-rich-quick schemes, because what I'm about to tell you about is not a get-rich-quick scheme. It's very intuitive, but I want to use this as a warning for you, for those of you who are clicking this video, who are perhaps looking for some kind of top-tier strategy that you can use to get like 100x this Bitcoin cycle. So let me toggle screens here, and I want to show you, when I type in Bitcoin trading strategy, you're going to see all these jokers here. And I'm not very fond or friendly of other crypto YouTubers, because the thing is, I don't mean to brag, but I've got money outside of this. I've got business interests outside of this, right? This is something I do as a hobby. If I can help out a few people, if they use my referral link, I appreciate it. I can, keep this channel going. It helps justify the time that I put into it. But for the most part, I'm already set outside of this, right? So I can think clearly, and I can tell people very direct advice, even though it might not be very popular. What gets clicks on YouTube and social media is get-rich-quick schemes. Anyone that promotes a get-rich-quick scheme, how to 10x your money, how to make X amount of money using crypto, typically is going to be someone that is a parasite, a predator. All these people here are talking about ways of trading crypto in a speculative manner using various technical analysis skills or various things. But ultimately what they're trying to tell you to do is, how to buy low and sell high, ideally using something called leverage. So for those that aren't familiar with what leverage is, it comes in a few forms, but you can usually get this on centralized trading exchanges like Binance or Bybit. There's an option for you to take out what's called a leverage position. So if you have $1,000, you can use this lever to determine how much more leverage, how much more money that you don't have you're willing to trade with. So if you've got $1,000 and you choose 10x, you can trade with $10,000, right? So if the price of Bitcoin moves up 1%, your position will go up by 10% essentially. And but the thing is, it goes down the other way. So if it goes down by 1%, then actually your position will, the money that you put into this position will be worth like 10% less, right? So you can lose money really quick and you can gain money real quick, right? A lot of people made money this way. I've done this many times. I did this for a couple of years, and I did well with it. I also didn't do well with it. It's up and down like a roller coaster. However, what I've come to learn over my years of doing this is that this particular method of trading is entirely predatory, because it's what you call a zero-sum game. The only way that one person could win is if 10 other people lose, right? If someone wants to make a 10x, 10 other people have to lose. And everyone's in competition with each other to be the first to sell, the first to buy at the lowest price, the first to sell at the highest price. And only one person can get the absolute best result. And the slower you are to the uptake of new information or whatever, the further behind you are in this competition, and you're going to lose out. You're going to be the first to get liquidated. You're going to be the first to sell at a lower price. And ultimately, when you're playing a speculative game in crypto or in the stock market, you're playing a zero-sum game against the collective psychology of the masses. They're all trading against you. And this is something that is visualized on the price chart, right? When you see the price go up or down, you're looking at the collective psychology of the masses, and everyone is trading particularly in the derivatives trading world and leverage trading world. Everyone's trading against each other. So if you're hoping to make $100 a day, like this person in the second video, you're hoping to outcompete all the other people trying to do the same thing. So imagine if all those people watch this video and then go sign up with his referral link to Bybit, and they start leverage trading, right? Imagine it's all these people who are trading leveraged contracts who watch this video. Only a certain amount of them can win, right? So when someone makes a video saying, you can make $100 a day, if it was possible, only a few people can do it, and they will do it at the expense of all the other people who watch the same video but failed, because it's a competition, right? So the problem is that these people are selling people on a dream, not even because that you can't make money from this at all. Maybe you make money sometimes, maybe you lose money sometimes, but the competition is too much stacked against your favor. So as someone who's been in this for years, I've met like people that are multimillionaires from trading. But the thing is, the difference between them and the plebs that watch videos like this is that they've gone to university for it, and they wrote doctoral theses, and they went to trade at top Wall Street trading firms or in top firms in China doing algorithmic trading or trading with AI. These are people that like, if their version of bragging about how much money they make is like they're already multimillionaires, and you ask how much money they made the last year, like, yeah, it was a good year, I made like 10%. They're not thinking about making 10 or 100x their money. Someone like that is thinking level-headed, whereas a lot of people in these videos, like the person who wants to make $100 a day probably only has like $1,000. Like, I'm just being honest, right? So you're trading against people with significantly more amounts of money than you. So they've got more leverage, they've got more things they can do, and it's very hard to beat them at their own game. And if I scroll down, there's probably going to be other things about, you know, how to trade like shit coins and meme coins, and how to make money while you're sleeping. And it's all a joke. It's all a pathetic joke, and these people are parasites, and you need to avoid anyone that tells you about how to make money too quickly, because there isn't really a get-rich quick scheme when it comes to Bitcoin. Even though you can technically do it, even if you made money very quickly, it's also very easy to lose money if you continue playing these kinds of games. So what is my strategy for how to make money in the long run? My strategy, it's not sexy. It's a very simple strategy, and it's very intuitive, and it simply goes like this: you buy a Bitcoin, and you hold Bitcoin, and then you don't sell a Bitcoin. You just hold it. You just hold it. You believe in it, and ideally, you're waiting till the day for total Bitcoinization of the world, and you can just buy and sell goods, whether it's cheap or expensive goods. You can buy whatever you want with Bitcoin, and by then, hopefully, your Bitcoin's worth $1 million. So this is not a sexy strategy, because this involves you holding through bear markets. This involves you holding for years. This involves you probably not 100xing your wealth. There was a time where you could just hold Bitcoin and 100x your money. That time's not now anymore. It's unlikely to ever happen again. Bitcoin, frankly, has become like a blue chip. If you wanted to do that, you had to be around since 2013, maybe even 2017. But if you're getting in roughly now, or even in the past couple of years, if you're look at the last cycle, Bitcoin 2021, it pretty much only did a 3x from its all-time high of 20k, which it achieved in 2017. So the chances of you making a 10x or 100x on Bitcoin is very unlikely, right? What you can promise is that if you continue to DCA over the many years, maybe even decades, watching Bitcoin slowly going up, it might become just a much more advanced version of the S&P. You'll be beating the S&P, you'll be making more money than that, you'll be beating inflation, and overall be good. And maybe you can put 10% of your money into altcoins. Maybe you can even gamble a little bit with a small percentage of your stash. But for the most part, what I'm advocating for is a very unsexy approach to making money in Bitcoin. You just simply need to buy and hold and avoid all the parasites that are going to come by the wayside and tell you about how to make as much money in a short amount of time. However, I'm not just going to tell you about just buying and holding Bitcoin, because most of you already like Bitcoin, you hold Bitcoin. So what I'm telling you is probably nothing new. But I want to give you the most bare minimum fundamental to follow, because many of you will be holding Bitcoin for a long time. And it will make sense to take some money off the table. You are going to want to take profit at some stage. If you've made a nice chunk of change, you're still going to want to have the best time to buy and sell. And the best time to buy and sell is, I would need to introduce the idea of the Bitcoin halving, because many people aren't totally familiar with how this works. So I just want to give a quick rundown of how this operates. And how it works is, so every 10 minutes a new block is mined, right? The people that were responsible for mining that block, the Bitcoin miners, the people responsible for processing the transactions of the Bitcoin blockchain, they're going to be rewarded with a certain amount of Bitcoin. Now, when Bitcoin was first made, when the Genesis block first was created, you used to be able to get 1 Bitcoin, right? And every 4 years there was an event called the halvening, where the reward was cut in half. So 4 years after that, you could only get half a Bitcoin. 4 years after that, you could only get a quarter of a Bitcoin, so on and so forth. And this will continue on until there's either no Bitcoin left mined, or the amount that is mined is not that much. You know, it's minuscule, or maybe it's not minuscule compared to what the price of Bitcoin is, but the idea is that Bitcoin over time is deflationary, right? And this is one of the big sell points of Bitcoin compared to fiat currency, in that it's supposed to be a deflationary currency over time, but it is still technically inflationary for the meantime, because, you know, Bitcoin is mined and created every 10 minutes. Over time, though, this is going to become less and less and less, and whenever there's a halvening, so that's every 4 years, the Bitcoin reward is cut in half. Whenever this happens, there's a supply shock, and whenever there's a supply shock, then there's the supply can't meet demand, and then as a result, the price will go up eventually over time. So the price of Bitcoin going up is essentially baked into the fundamentals of Bitcoin, because it's going to be increasingly deflationary. There's going to be less and less inflation. There's less supply, and even if you have the same amount of demand, if there's just less supply, there's just going to be less on the market, less on the exchanges, less on the OTC market. Therefore, people have to pay a higher price to get what they would have gotten before at a lower price. So just to make clear what the definition is, let me just read this for you. What is the Bitcoin halving? Bitcoin halving is an event that takes place on the Bitcoin network approximately every 4 years. In this process, the amount of new Bitcoins created and released into circulation is cut in half. The main purpose of this process is to control the supply of Bitcoin, keeping it steady over time. As a result, it helps maintain its value by preventing inflation from occurring when prices rise too quickly. Halving also has the implication for Bitcoin miners, as fewer mining rewards means increased competition and lower profits. Halving helps both investors and miners alike by helping to keep Bitcoin a stable and reliable investment option in the long term. All right. So let's look at this in practicality. What happens when there is a mining? What happens when there is a halving in the mining price, right? So if I go simply look at the Bitcoin chart, I'm going to tell you exactly when there was a mining event, a halving event, right? So the first halving was 2012, I believe. And what tends to happen when there's a halving event? Let me get out of the way here. What tends to happen when there's a halving is that it takes approximately a year for the effects of the supply to feel more dwindled in the markets, right? So when there's a halving, it's not felt immediately in the price, but about a year, that's when you notice prices go parabolic. So in 2012, I can't remember the exact date, but it was definitely in 2012. There was a halving event, and you see the price. It's, you know, $90. Wait, you know, let me just get a more clear picture of this, so you can see exactly what happened in 2013, which was the major bull cycle of that time. So, by the way, when I say bull cycle, there's an economic cycle within Bitcoin that is divided up into 4 years based on these 4-year cycles, right? So when you hear someone say bull or bear cycle in Bitcoin, they're referring to these 4-year cycles where when there's a bull cycle, it approximately occurs a year after the halving event, and the price of Bitcoin goes parabolic. And then about a year after this parabolic this trend, since when it starts, it goes down and crashes because the mania has kind of died off, and then it goes into a bear market and awaits the next halving cycle, right? So this is around the time, well, you can't see, it doesn't go back to 2012, but 2012, there was a halving cycle. You see it's just hovering around $100, and then it goes into overdrive, and as you can see in 2013, it went up like 10x in a short amount of time, right? So that's what happened with the first halving cycle. The second one here, the second halving happened in around 2016. So let's pull this up here. So it happened around, yeah, I think around June, maybe March. Can't remember, around here, right? But the price didn't move significantly. Maybe this little blip was a reaction to the news, right? But then there's maybe it was already priced in. But as you can see, the price slowly goes up as there's less and less Bitcoin in the market, and then boom, 2017, 4 years after the the bull cycle in 2013, you see the price go up massively, right? Goes all the way up to 17K. So let's look at the most the previous cycle we had, which was in 2021. So the halving happened in 2020. Again, I forget the exact date. I think it was March or April or something like that. And then what happens again? We go into another bull cycle, and we peak at I think the highest was like 68K, or we were around 67, 68K. And what happens is that there's a blow off top that happens, and it tends to happen in November. So if I look back through the history, it tends to be November for whatever reason. It just in November, December, maybe even January, right? So this is the first bull cycle. It peaks in 2013, December 2013, and then this is when the blow off top happens, and there's a reattempt to retake those highs in January or something like that. And then the price cools down, the mania ends, and life goes back to normal. Everyone says Bitcoin is dead for real this time. And again, let's see, what date did the Bitcoin crash happen after this mania top? Well, the mania ended in December 2017, and then there was a little attempt to regain that in February, and then it was just GG after that. The mania died out, and then everyone said Bitcoin was dead, and the cycle repeats itself. And then what happens with 2021? Well, this was a weird cycle because we see it happen in two goes. We see a lot of action happen in April, but the real blow off top was in November. Again, exactly the same thing. Early November this time, it blew off at around 67.5K. There was a little attempt that happened to retake that in April or March. And then again, Bitcoin was left for dead after that. Everyone said Bitcoin is dead. So I think it goes without saying, based on previous cycles, that we're likely to see a similar thing. We've had the halving 4 months ago now, and everyone is in fact reacting to the price already. You can see the price has gone up significantly since then. But it's most likely that next year is going to be the bull cycle coinciding with the other bull cycles that took place in 2021, 2017, and 2013. And we know when it's very, very likely there's going to be a blow off top, it's going to be in November and December. So I'll just start pulling my money out in September, maybe like a month or two before that, right? You would have made mind-bending gains already. There'd be no problem with just playing it safe, not trying to time the market exactly, and just pulling out at around September, October, something like that. That's exactly what I do. And you don't have to pull out all your money. Maybe you can just pull out like a little bit of money, pull out 10, 20, 30%, but don't get in the habit of trying to time the tops and pull everything out, because I could still potentially be wrong. So I wouldn't want you to get absolutely wrecked because you decided to take your gains out and you wanted to go too hardcore with it. So that's really it for my video. I don't really have any other complex trading strategies. I have some technical analysis that I can tell you about in some other videos. I think I've already talked about it. But that's really all you need. There's nothing complex about it. Buy and hold Bitcoin. Maybe you can hold some ETH. Maybe you can hold some Solana. Make sure it occupies a very small part of your portfolio. If you want to mess around with the shitcoins, make sure it's like less than 1% of your overall portfolio, and then make sure to sell. Don't hold on to it forever. Realize if you're ever going to get into shitcoins or even derivatives trading, if you at least have it in your mind that it's a competition against others and it's a game of gambling, then you should at least have that in your mind, because that'll at least prompt you to sell. That'll at least get you to think about things in the right way. Most of crypto is straight up gambling, and I don't want my viewers to get involved in gambling. I really want to warn you against this kind of stuff and to play the long game. You can make a lot of money in crypto if you're willing to play the long game, but it's like anything else. You can make a lot of money in the S&P 500 as long as you're playing the long game. Those that want to play the short game, always going to get wrecked in the end. So if you're interested in buying crypto, you can use my referral links in the description down below. I am always recommending and a big proponent of non-KYC exchanges. These are exchanges where you don't have to use any KYC to sign up with the exchange. And I'm also a big proponent of non-custodial exchanges. These are exchanges where you don't actually have to put your money on the exchange in order to be able to trade. So if anything happened with the exchange, your money would be safe. They're not the custodians of your funds. Therefore, everything would be safe. And my top two recommendations are: number one, hodl. If you're a hardcore trader and you really like non-custodial trading where you don't have to get KYC, hodl is actually the best one. However, I would also recommend one called local coin swap, which also has these features, but there's a lot more volume on there, so you can get better rates, right? And two other ones that I want to recommend are they're custodial exchanges, but they don't require any KYC, and that's BitPapa and BitValve. And the benefits of these P2P exchanges is that you can buy Monero on them. So since the shutdown of local Moneros, which was a very popular peer-to-peer trading platform for Monero, there hasn't been a lot of great alternatives. So I found two really good ones you can use to sign up with using my referral links in the description down below. And I'll see you next time. See you later.